Wealth Vision Mastery Academy. Thank you for joining me today. Just wanted to go through a video course that we're doing at the moment. I hope you're a bit excited about it, is what I am. It's about managing cash in your business. We see and hear quite often throughout the news that there's too many businesses around the world suffering from cash. And a lot of that comes down from lack of planning, but a lot of it happens from outside of your control, your customers. Well, today and moving forward, we are going to show you a video and we're going to have a course for you. I have an 8-step or 8 strategies that you can start applying in your business today. The first strategy I want to tell you about is understanding your current position, getting a grip on your current position, knowing where you're at. Second one, do your invoicing on a regular basis. The third strategy, look at implementing deposits, retainers and subscriptions in your business. The fourth strategy that I'm going to be showing you is implementing a credit control policy. Keep it simple, doesn't have to be difficult, but make sure all your team members are aware and implement it. The fifth strategy is looking at your inventory and making use, the maximum use that you can, of your suppliers. Strategy 6, setting up an emergency fund. The emergency fund is for the times when you need it. The emergency fund takes into account the seasonality of your business, takes into account taxation obligations, it takes into account if you want to grow your business, right? That's the purpose of the emergency fund. Strategy 7, I'm going to show you how to implement an easy, keep it simple system, cash flow forecasting. Essential for every business. You must do your cash flow. If it's not you, someone in your team should be doing it for you. Yeah. And strategy 8, looking at implementing a cash management system that works. But it needs to be constantly updated because situations outside of, your competitors are changing, their pricing is changing, the market's changing, the government's changing legislation. So your cash management policy, your system, needs to change in accordance. So stay tuned, and we'll put through more videos for you. Keep an eye out, watch the video that's coming up, and feel free, I'd love to for you to join our course so I can help you improve your cash management, so I can make you more profitable, feeling a lot happier, your team's a lot happier, less stress on you, and you become a master of your business. So stay tuned, look forward to seeing you soon. Cheers, bye-bye. Hello, it's Peter again from Wealth Vision Mastery Academy. Thank you for joining back with me. Okay, so we're going to start talking about cash management for your business. Are you ready? Got a notepad, got a pen, and a pen that works? Plus a cup of tea or coffee or whatever you feel like drinking. Let's sit back now, folks, and let's get stuck into cash management. What is cash management? Look, cash management is simply the method that you use to be able to manage the cash in your business. Cash is important in any business, as we know. If you've got some, then you've got plenty of room to grow or spend. If you don't have much, then it's difficult. The biggest reason that business fail, apart from planning, is poor cash management. Quite often we hear a lot of the terminology bank balance accounting. If you can stay away from that, that's absolutely fantastic, because bank balance accounting is purely looking at your bank balance each day and saying, okay, who's going to pay me today and what bills can I pay? Bad management. So let's have a look through this series of working out some good opportunities to improve your cash management in the business. It's going to create less stress for you, more money in your pocket and more money in the business to allow you to do what you want to do in the future. So ask yourself this question: is your business struggling with cash management at the moment? If so, continue to listen, because I'm here to help you overcome those cash management issues. Now, a common question I get asked is profit growth. Why is profit not the same as cash? Well, there's a couple of reasons for it. Profit is purely a timing issue. Cash is when you physically get money in the bank. Now, if you speak to your accountant, profit at the end of the year might be absolutely awesome, but that's probably because you've got accounts receivable that being put into your profit and loss account, but your customers haven't paid yet. That's why you see it's a timing effect. It's the timing of when you do your invoices as opposed to cash on hand. Also, your cash on hand might differ because you've paid your taxes, you've bought some assets. It could be for any particular reason whatsoever. So they're the crucial differences between the profit that you see on your income statement or profit and loss statement as opposed to the cash that's in the bank account. Quite often I get told, well, I've made $100,000 profit, but my bank account's not showing that. Okay, next slide, folks. Life cycle. Now, this is a typical retail / wholesale business scenario. In this particular scenario, we're looking at how much time you can be out of pocket with money, right, from the time that you order. So if we have a look at week 1, for instance, you receive the inventory, and then week 2, you pay your supplier, right? In the meantime, you've still got other overheads like rent and employees. And as we can see, a little bit later on, after week 4, we start to sell the inventory. So we're basically holding on to the inventory for 1 month, right? But your payment terms from your clients are 30 days, whereas your payment terms to your suppliers are 7 days. So you can see there in basically week 8, right, you get your money from your client, $200,000, right? So the biggest chunk that's come out of your bank account is in week 2, plus your ongoing expenses. Right? So you could potentially be out of pocket for up to 7 weeks, right? Now if you look at your overdraft interest, right, probably about 12-13%, okay, you could be forking out $1,500 just purely in interest, just over that 7-week period, right? Now, what you can do to improve the same scenario is just discussing with your suppliers, right? Discussing with your suppliers about extended payment terms. Rather than being 7 days, see if you can get a 30-day account. Now, if you've got a good trading history with your suppliers, more likely they'll say yes, right? So then your payment terms with your suppliers are equal to the payment terms that you give your customers. Make sense? And in this particular scenario, you could be out of pocket for 4 weeks, but that's more manageable than 7 weeks. Okay, how can I better manage cash in my business? As we mentioned earlier, we can forget things like bank balance accounting. Review your current financing situations in terms of your financing requirements. Do you have enough finance, right? Do you need to seek more finance because your business is growing? Review your inventory levels. Do you have old stock there that needs to be cleared? Review your aged debtors reports or trade receivables, whatever terminology you want, right? Look at the aging of them. You've got debtors that owe you money 90 days plus. Well, look at reining that debt in, but not just now, but also ongoing, and we'll show you that through our latest strategies. Review your tax obligations. You may have GST, VAT. Well, look, that's not your money. Put it aside till when it's due. Review your outstanding bills. Also, what I do is every so often I go through my bank statement. I go through it for a 3-month period. The whole idea, I want to know where my incomes come from, but more importantly, I want to know where my money's gone. Quite often I see customers that haven't gone through their bank statement and they're incurring unnecessary charges, things that they've cancelled subscriptions on, but the subscription charges are still coming through. I had one client in Australia who had 9 charges coming through each month for one service, right? But because he hadn't been keeping an eye on the statement, right, he's getting all these extra bills or payments. So I encourage you folks, have a look at your bank statement for the last 3 months. Have a look to see if the expenses are valid. Have a look at your income to see if there's any income. Okay, now let's start on the strategies that we talked about first. Strategy 1. Look at your current position, understand it, get a grip on where your business is now. Yes, you might say, yep, I know what my bank balance is today, but that's not just your current financial position, right? You've got to have a look at all the reports that we talked about just briefly, right? Look at your aged debtors report, aged creditors, inventory reports. All those are very useful reports to see what's old, what's outstanding. Let's clear those. Let's put a system into place to clear those old debts and inventory, and let's work on a system moving forward. Also, it's crucial to have a look at your profit and loss statement. All right? Have a look at your income. Have a look at your expenses. Is there anything abnormal there that should be considered to be reviewed? All right? And action taken. Have a look at your balance sheet. One of the most crucial reports. It tells you the state of your business. Have a look to see if there's anything unusual on there. Now, one of my favourite reports is a statement of cash flow telling you what's happened to your cash for a certain time period. Have a look at it for the last 3 months in conjunction with your bank statement for the last 12 months. Have a look at any anomalies there. Now, if you're using a manual system, then you're going to have to look at your cash book to identify these anomalies, but it's going to be a lot harder. Whereas if you've got an automated system like Xero or QuickBooks, Sage, Maya, whatever, you've got the information there at your fingertips. Strategy 2. Invoice on a regular basis. If you're selling product, raise invoice on the day of delivery and send invoices with goods. It's a pain in the neck for customers, for your customers to receive goods, and they've got nothing to mark it off against. Right? Make sure an invoice goes with the goods, so then the customer can see what they've got, tick it off, make sure the pricing's right, put it through their accounting system, and get you paid on time. Right? Another good part of this strategy is email the same invoice to the client to let them know that the goods are being delivered. At least now the client's got 2 copies, one that came with the goods and one sent via email. Right? Now, if you're selling a service, invoice at the time of job completion. So critical. However, if your service job is longer than 1 month, invoice clients at least monthly. Professional industries, they have that same problem. Right? You'll find that particularly like in legal firms, they might have a matter dealing with a client that might last 6 months. Right? Rather than invoicing at the end of the 6 months, invoice on a monthly basis. Tell your client that's what you're going to do at the time of signing them up. Let them know that you're going to be invoicing monthly because you've outlaid the expenses. You've outlaid employee expenses to do the work. You've outlaid disbursements. You've outlaid office rent and all other expenses. So even though I'm talking about the legal industry, the same applies for any other service industry. You could be in construction, you might be building a house. Invoice as you go. One of the common mistakes I find a lot of people do, they get customer queries about their product or their invoicing, right? But they don't answer them. So the payment's going to be delayed, isn't it? So answer your customers' queries immediately. So that way they've got no excuse for not delaying the payment for you. Alright, get in, even if you've got to do a credit note because the customer hasn't received all the quantity or the pricing is incorrect, do it. So at least that way then the customer's got no excuse for not paying you on time. Strategy 3. Implement deposits or retainers or monthly subscriptions. Don't be afraid. Ask your client for a deposit or retainer, particularly if you've got a big job, right? And it's ideal if you have to purchase inventory items for service jobs, particularly if you're like in the construction industry, I should say, not inventory. If you're in the construction industry or doing one of those services, right, you're going to be going out buying parts, right? Why wait until the job is complete before you get that money? Because that money's coming out of your bank account. ask for that money up front, right? So at least then, the only part of your invoice that's at risk is your labour element, and that really comes down to the quality of service that you give your client. If your quality is good, then the client's not going to have any hesitation paying you, right? It's also ideal for the legal profession, as we talked about earlier, where the client job may be 6 months in the making. Invoice regularly, ask for a retainer if you've got to pay out-of-pocket disbursement expenses, right? Put it in your trust account and properly account for it, right? Another good option that you can think about under this strategy is putting clients on monthly subscriptions, payable on the first of each month for the upcoming month. We see this a lot now happening in the accounting and bookkeeping industry, right? They've got a 12-month project with a particular client doing all their bookkeeping functions and everything like that, okay? So what happens is it's a set fee. The client's happy because they know how much they're going to pay. The risk is put back onto the bookkeeper or the accountant as to the amount of time that's spent to get the job done. But the money's coming into the bank account, which is so much crucial for your business. Okay, particularly if you get the money on the first of the month for that upcoming month, you've already got the money there set aside to pay for your office rent, to pay for your employees. It's awesome. Everything is becoming cloud-based now. So look at those options. Whether your service is cloud-based or not, you can still do it. And one of the upcoming videos, particularly for the accounting and legal industry, I'm going to be showing how you can value add. And as a result of value adding your products or services to your client, you'll be able to get subscriptions implemented on that. But that's for an upcoming video. Okay, strategy for credit control policy. Who has a written credit control policy in place in their business? Yes, I hear, yep, I've got a credit control policy, but it's up in your head. Get it down in writing. Get all your team members aware. Now, a lot of businesses will only tell their finance department as to what the credit control policy is. And I encourage you, please, let your sales and marketing team know, right? Get them involved. They're the ones out there selling and marketing your product or your service. Get them involved. Show them the credit control policy, and make sure that's in conjunction with your administration team. Because what we don't want is any conflict, like the sales team going out and selling a product or a service and saying, oh yeah, no worries, you can pay me in 30 days. Whereas the admin team are chasing up these clients and saying, well look, the payment term's 7 days. Avoid that conflict. Make sure everyone's happy. Make sure you have a written credit control policy in place that is manageable. Everyone sees it. Keep it up to date, right? More importantly, keep it up to date. External conditions change. Your competitors change. Your market's changing. So make sure your credit control policy changes in line with those changes, because you don't want to be outdone by a competitor, right? Now, contents of a typical credit control policy includes your terms and conditions of sale, setting credit limits for your clients once they've filled out the credit application forms, invoices to be raised on a regular basis. Other elements of the credit control policies: contact the client on the due date as a reminder payment's due. And if the client is suffering any financial difficulties, put them on a payment plan, right? At least that way you're still getting some money, rather than just hammering them, right, for the money, and they're going to turn around and say, well, I can't do it. So there's another time period wasted. Put them on a payment plan, so much per week or so much per month or whatever's suitable for your business. And lastly, if you've got a pain in the neck client, don't be afraid. Put them on hold. Put them on stop supply until you're comfortable that they can meet the next shipment. Because there's no use sending another shipment of product out or doing some more work for them if you're still hassling about the old debt, because now you've got 2 debts to worry about. Alright? Put them on hold. Stop supply. If you lose the customer, okay, that's a problem. But if you can bear with them, enter payment plan arrangements with them, that's helping the customer, and the customer is helping you. then you can work on future relationships. You have to know your client and what value they add to your business. And lastly, in strategy 4, add late payment interest. Right? If your overdraft interest rate's 12-13%, charge a portion of that, because you're having to chase the debt. Right? You're having to fund it, whether you've got an overdraft or not. Okay, strategy 5, inventory and supplier discounts. Inventory management is so crucial for cash management, so closely linked together. You buy too much stock, right? Out cash, up goes your stock, and then you can't sell it. As you know, we've got many stages of inventory. We've got work in progress, spare parts, and finished products. Always review your inventory levels, even if it's on a monthly basis. Ask yourself, what are the lead times? Right? Are the lead times too long and you have to buy up plenty of stock? Well, look at alternate solutions. Look at the alternate suppliers. Maybe you can find a supplier that has less lead time, pricing's the same. Alright? Then you don't have to buy so much stock. Not a big dent in your bank balance. Also, have a look at your inventory levels in terms of any products. Can you sell them all? Is there any old stock on your system? What are you going to do with that old stock? Hopefully not just write it off. Consider options. Repackage the product. Resell the product in a different form. At least try and get your cost back. The money that's gone out of the bank account. Right? Consider the various ways, and we can show more on this in a later webinar, a later video. Cost of wastage in manufacturing and also any other industries. Cost of wastage can be as high as 10% in a lot of industries. Look at it. Look at the implications. What's causing the wastage? Is it an employee factor? Is it a machine factor? Is it the product material factor? Have a look. Take action. Decide what's going to reduce the cost of waste. Because that cost of waste is coming out of your bank account. Alright? And don't be afraid to ask your supplier for extended credit terms. Alright? Make it a fixed arrangement for credit terms. Understand, if you've got a good relationship with a supplier, they're more than likely willing to extend credit terms for you. Even if you're on 7 days and extend out to 14 days, well, that's an extra 7 days improvement. But if you can go from 7 to 30 days, awesome. So have a look at that, think about it, and discuss that. Now, one of my favourite strategies is what I call the emergency fund. The emergency fund is basically a separate online bank account that's linked to your normal trading bank account. Because I don't want you going down the bank and making separate deposits and making separate withdrawals. Keep it simple. Keep it online. Use it as like, try and see if you can get a cash management account. Right? But the purpose of the emergency funds account is simple. Right? We want to set monies aside for the times that you suffer from seasonality. Seasonality happens particularly in a lot of industries. Seasonality can happen from weather, like the landscaping and gardening industry. For 4 or 5 months of the year, that can be really, really busy. But then for the rest of the year, it can be really quiet. So you need to have money set aside. And if it's out of your normal trading account into an emergency fund account, then you're not likely to touch it. Alright? Also, the emergency fund account is useful for tax obligations. Set your tax monies aside. Also, any employee entitlements. Right? You might have employees take an annual leave in future, or you might have an employee who's got 6 or 8 weeks leave due to be paid for them. Right? Well, if they leave the business, where are you going to get that 6 to 8 weeks pay, the holiday pay? It's got to come out of your bank account. But if you gradually put some money aside, it's not going to be a big hurdle when that employee leaves. Another thing I do with the emergency fund account is each week I scrape any VAT or GST that's due into this emergency fund account, because it's not my money. It's the taxation office money. It's not mine. So I'm not going to keep that. So I'll scrape it out, put it into the emergency fund account. Alright, all you do is just add up your deposits for the week. You say, okay, well, if your GST is 10%, 10% of those deposits go straight through internet funds transfer into my emergency fund account. But one of the other things I like doing with this strategy is if I've got excess funds, I transfer it to the same account, so it allows me for future growth. If I want to introduce a new product later on, I need to spend money on research and development for the new product, make sure it's going to work in the right market. Well, if I've got excess funds in my emergency fund account, then great, I can use it. Right? This emergency fund account is so essential for your business. Okay, strategy 7, cash flow forecasting. It doesn't matter whether you're a small corner store, whether you're a big company, medium-sized company, you need to make sure you can do cash flow forecasting. It's not difficult. It's really simple. Alright? All it takes is time. Implement a system straight away for cash flow forecasting for at least the next 3 months. It's going to show you which way you're going to go with your business. You can predict how much income you want to get in. You can predict your expenses. Okay? Look at it. Implement a system. Seriously. I can give you an Excel template. It's free of charge. I don't care. But the key thing is implementing a system so it starts helping you plan for your business. You could do it greater than 3 months. If you're really serious about growing your business, right, do it for a 12-month period and keep updating it each month. Now, the cash flow system is ideal for covering seasonality period. It allows you to consider your business growth, any product launches, and also your tax obligations. I come back to the old system of keep it simple. Alright, keep a simple system principle, not the other KISS principle that you're thinking of. Right? So have a consider of that, right? And just work on that. Keep it easy. Now, the last strategy I want to cover with you today is systemizing your cash management system. Ideally, if you can use, and I highly encourage you, to use an accounting software package like Xero or QuickBooks, right? Or any other accounting software package that's going to get you the results that you want. Your software package is time effective, it's also cost effective, and easier to use, easier to manage. Let your team know about your system, right? Get them involved, train them properly, make them, more importantly, understand the implications of what they're doing with the system. Not just say you prepare a sales invoice, but tell them the implications of what happens with the sales invoice, how it impacts on the whole accounting system. Alright? Because I see so many people that just say do sales invoices and this is how you do credit notes and process cash receipts. Alright? But the person doesn't know what to do. They don't understand the implications, so if they make a mistake, it can have an enormous impact on your business. Put your system into action. Alright? As we said earlier, tell your team about your system. Put it into action. Implement it. Review your financial reports on a regular basis. Another key element that you do is monitor your performance. Now, your financial reports are going to be a great guide, but if your system's not working properly, right, you need to be able to fix it. Right? So key essence is monitoring your performance, making sure that the performance is the way you want it to be, and retweak your system when changes occur. Okay, summing up now, folks. End result. If you implement the above strategies, the benefits that you're going to achieve is less stress on you. You're the business owner, right? You have enough stress in the business as it is. But implementing a proper cash management system is going to mean less stress for you. Everyone's going to be happy, all your employees, your shareholders, your customers, your suppliers, everyone. Improved bank performance, and business performance, and more importantly, more cash in the bank. So, how can we help your business? The team at the Academy can help you with better cash management in your business. We can take care of your credit control policies, and we can take care of training your employees with implementation. We can implement the debt collection process, saving you time, money and stress. We ring up your customers on your behalf and start chasing the payments, right? So it saves you time. You'll get the money in your bank account a lot quicker. We can help you with the cash flow forecasting process, right? We can give you the tools that you need, right? So you can start implementing cash flow systems into your business, right? So much more that we can do to help you. So I'm going to leave this webinar today with a special offer. Me and my team are going to give you a free 30-minute consultation to show you how you can apply these strategies that you've learned today in your business. So if you want to improve your business performance and your cash management system, you're serious about it, you'll take up this free 30-minute consultation. Let me, all my team members, show you how we can help you in your business. It doesn't matter whether you're a small corner store or whether you're a large organization. Regardless of that, we're here to help any business owner that's keen and enthusiastic about improving their business. That's what we're here for. So here are our contact details. All right. Stay tuned. We're going to be having a look at other webinars and other videos coming up soon. Now we do have a Google Hangout happening on Wednesday, May the 4th, right, on reading financial statements. Quite often we